Hey, good morning, everybody. My name is Cliff Backus, and this is your PushButtonStockTrading.com Daily Video Market Review Weekend Edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, as you know, much of what we do at Push Button Stock Trading is based in full or in part on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's go through that really quickly. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings and or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new, something new, new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit growth. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of average daily volume on the day that they break out. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional managers are accumulating. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is, and to that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. On Friday, of the top 100 most powerful stocks in the most powerful industry groups, 16 came from precious metal mining, 8 came from real estate investment trust, 6 from home improvements, 5 from exploration and production, and rounding out the top 5, we had beverages, semiconductor devices, consumer finance, cement and aggregates, and casino and gaming, all with 4 stocks each in the 100 most powerful stocks in the most powerful industry groups. We've been seeing a lot of semiconductor devices recently. We've been seeing a lot of real estate investment trust. These may be good places to look for leadership as this market goes forward. Let's start today by taking a look at the Russell 2000. We haven't looked at the Russell 2000 in a while. The Russell seems to be struggling with minor resistance down in this level, which goes back to our December 14th low of 1108. I'd like to see the Russell better that area. The Russell, as we've been noting for quite some time now, is the key to the market going forward. and we keep coming up against resistance levels and just struggling. We'll see if the Russell can decisively take out that 1108 area. If we were to take out that area, our next significant area of resistance is going to be down here in the 1140 range. Note how we have this trend line that's going to offer resistance at some point. And also shown in black here is our 200-day moving average. That will also offer minor resistance for the Russell 2000. And so the Russell 2000 is struggling a little bit here, and as the Russell 2000 goes, our market goes. Let's take a look at what the NASDAQ Composite's up to. But before we do that, the final letter in the CAN-SLIM acronym M stands for market. And to my way of thinking, this is the most important element. So let's take a brief look at the market here. Up again, down again. Friday's stocks pushed higher, but it wasn't a particularly bullish session, with stocks closing in the lower half of their daily trading ranges. Trading volume was light. Last week we talked about a schizophrenic market. Trading Friday did nothing to dispel that notion. While Friday was not a distribution day, distribution remains a concern in this market. A distribution day is a session where one of the major averages trades at least 0.2% lower on higher trading volume than the prior day. Distribution is a sign of institutional selling in the market, and too many distribution days in a short period can indicate that the uptrend is in trouble. While we have the distribution count on the NASDAQ at 5 days in the past month, Investors Business Daily counts 6. 6 distribution days in a month is enough of a concern for the bulls that IBD has changed their market outlook to an uptrend under pressure. That noted, our market timing model remains on a buy. A buy signal indicates that both aggressive and conservative traders can buy, but shouldn't be increasing margin at this point. We've been noting concern about the lack of names on our universal watch list recently. In a healthy market, we generally have between 50 and 90 stocks on the universal watch list. We currently have 36, and that's down from 37 last week. The weakness in our universal watch list indicates weakness in the market leadership. Advancing issues top decliners by a little better than 3-to-1 Friday. The New York Stock Exchange advanced decline line looks stressed but bullish. New highs again bettered new lows Friday, but our new high, new low indicator remains on a sell signal. Although often premature and subject to frequent false starts, the new high, new low indicator is frequently one of the first indicators to signal a change in market direction. Of further concern for the bulls, the McClellan oscillator remains in sell territory. According to our Ramosi ratio, large capitalization stocks bettered small again on Friday. Large caps continue to outperform on a 10-day moving average basis. Bulls would prefer to see small caps outperform. In spite of the elevated distribution count on the NASDAQ and increasing signs of stress, we remain cautiously bullish on the market. Traders may want to take advantage of any weakness that develops to add to or tweak their portfolios. That noted, be careful and, as always, keep your stops in place. Okay, on Friday, the NASDAQ Composite was up 2.32 points or 0.05%. We closed at 48.50, and notice how we closed in the lower half of our daily trading range. We struggled with the 200-day moving average, which we show in black, and couldn't better it. We closed below that level. Note the 200-day moving average in black. Trading volume was below the prior day and was well below average. For you followers of William O'Neill, we are in an uptrend under pressure in the market. We're indicating 5 distribution days in the past month. IBD has 6 distribution days. That's a lot of distribution and is cause for concern. It's the reason that the IBD is calling the uptrend under pressure. Right now, the NASDAQ Composite is bracketed by support at this trend line. This trend line goes all the way back to the beginning of the bull market, all the way back in 2009. We seem to be finding support in that area. Break below that trend line would be, I think, a little bit of a concern for the market. And we seem to have resistance up here in the 4,900 area. We've tried that area several times and have failed. We have minor resistance here at the 200-day moving average. Our market timing model right now is on a buy signal. As we mentioned earlier, a buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Let's take a look at what the S&P 500 is up to. On Friday, the S&P was up 5.69 points, or 0.28%. We closed at 2047. Notice we came down and we tested support down here in the 2044 area, and we held. The S&P closed in the lower half of its daily trading range, which isn't going to make the bulls too happy. Trading volume on Friday was below the prior day and below average. The S&P is in an uptrend under pressure. We have 4 distribution days on the S&P in the past month. Right now, we are bracketed by support down here in the 2044 area. That support seems to be holding pretty well, and resistance up here in the 2116 range. We have this little mini downtrend in the S&P right now. It would be nice to see the S&P take out that downtrend and then move on to resistance up in the 2116 area. Right now, our market timing model is on a buy signal. Before we go, let's take off these markups, and I want to talk about our buy signal. Currently, our market is on a buy signal, and I have no reason to believe that that's going to change anytime soon, but I would like to talk about what it takes to go from a buy signal to a don't buy signal on the market. So to go to a don't buy signal on the market, we're going to look for 4 things. First, we're going to look for the S&P to be above its 200-day moving average, which it currently is. We are above the 200-day moving average, which we show here in black. Second thing is we are going to have to see the 10-day simple moving average, which we show here in green, lower than it was the prior day. We don't meet that criteria. The 10-day simple moving average is higher than it was the prior day. We need to see the 21-day exponential moving average, which we show here in pink, lower than it was 2 days prior. And the final criteria is we need to see the S&P close at least 1% below its 21-day exponential moving average. That's what this envelope is. And so we need to close below that envelope. We're not in any danger immediately of going to a don't buy signal, but it's worth knowing what we're looking for. Let's take a look at some stocks that we may be interested in watching. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, 3 stocks I want to take a look at today. The first is Facebook. Facebook provides a social networking platform enabling members to stay connected with friends and family via Facebook.com. I think we all know what Facebook does. Facebook is working on a first stage base on base formation. Notice how we had this first stage base. We tried to break out of that base but fell back into it, and now we've formed another first stage base on top of that. We have 2 things going on here. First, we have a very oddly shaped cup and handle base, which gives us a pivot point in the 116.99 area, or we have a consolidation base, which would give us a pivot point in the 117.59 range. Either one is a valid buy point. Generally, in a cup and handle base, we want to see the volume dry up. We have these 2 spikes in volume, and there are 2 spikes in downside volume in the handle of this cup and handle. That's a little bit of a concern. Facebook fundamentally is one of my top favorite picks. On a technical basis right now, not so much. Facebook gets a 76% checklist rating and is worth keeping an eye on by both conservative and aggressive traders here. Keep in mind that I'm not really thrilled with the volume signature here, and so caution would be advised, at least on a technical basis. If you buy Facebook on the breakout either above 116.99 or 117.59, make sure you keep your stops in place. The next stock I want to take a look at is SolarEdge Technologies. SolarEdge is an Israeli-based manufacturer of DC-optimized inverter systems, solar power harvesting, and PV monitoring solutions. Stock has been working on this first stage consolidation base with a pivot point up here in the 30-50 area. SolarEdge gets a 64% checklist rating, and we've seen quite a bit of accumulation in SolarEdge recently. I like all of this accumulation. Both conservative and aggressive traders may want to keep an eye on SolarEdge at this point. And the last stock I want to take a look at is Southwest Airlines. Southwest Airlines provides predominantly point-to-point high-frequency short-haul domestic airline services to 97 cities and 40 states. The stock has been working on this first stage cup with handle base. Good looking base right here. Notice how the volume has dried up in the handle portion of this cup and handle base. Southwest Airlines doesn't meet our criteria for our universal watch list. It only gets a checklist rating of 56%. But I like Southwest Airlines here because I like the airline industry, and this fundamentally is the most sound airline that hasn't already broken out of its base. Southwest can be bought by aggressive traders if we break above the pivot point in the 45.39 area. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.